From Washington, D.C., this is Middle East Focus.
Welcome to Middle East Focus. I'm Alistair Taylor, MEI's editorial director, and today we're going to be talking about Lebanon and the challenges facing its economy and banking sector. To discuss the situation, I'm joined by Omar Slim, a senior investment manager, longtime observer of the Lebanese economy, and committee member with the organization LIFE, Lebanese International Financial Executives. Before we begin, I should also note that this interview is being conducted with Mr. Slim in his personal capacity, and all opinions and views expressed here are his own. Omar, thank you for joining us, and welcome to the program.
Thank you. Good to be with you.
So let's delve right in. Lebanon is currently facing a difficult economic situation on a number of fronts. What, in your view, are the biggest and most pressing challenges facing the economy right now?
Lebanon traditionally has three major vulnerabilities. The first one would be it has a lot of debt. To give you some numbers, debt to GDP is about 150%. Lebanon has consistently had budget deficits. Lebanon has the highest cost of servicing debt on the planet. So debt is one of the major issues in Lebanon, and years of lack of making progress on that front has exacerbated this particular issue. The other thing which I should mention is that Lebanon has always had external imbalances because of its very large current account deficit, meaning that Lebanon exports little products and imports a lot. So essentially, Lebanon needs constant inflows, and the inflows have been either reducing or are coming at a higher cost. The third thing is that Lebanon has a relatively weak institutional framework. And by weak institutional framework, I mean the rule of law is not always observed. The ease of doing business is quite challenged. There is rampant tax evasion. There has been a lack of economic leadership and policy leadership. There hasn't been a lot of investments in the infrastructure, or essentially no investment in the infrastructure. So the lack of making progress on all three of those major vulnerabilities have exacerbated the weaknesses of Lebanon and has led really now to a rather difficult situation for Lebanon. I might even say a combustible situation for Lebanon.
In recent years, as you alluded to, Lebanon's grown increasingly reliant on inflows, particularly remittances and transfers from Lebanese abroad to compensate for those twin debts in the budget and the current account deficit. How sustainable is that going forward?
That's a good question. So the reliance of Lebanon for inflows has been long-standing. The issue now is that the inflows are coming but are becoming more costly to attract. And if you look at, for instance, where the interest rates on plain vanilla deposits in Lebanon are now, they're quite high. So the reason being is that there are some cyclical issues. For instance, a large part of those inflows is coming from the GCC countries. And these Lebanese who are living in the GCC, for instance, have a reduced capacity to send, and the GCC economies are facing challenges of their own. The other is that because of the patterns of the immigration of Lebanon, and as you know, Lebanon has a very large diaspora, structurally those inflows are becoming less and less. So the sustainability of those inflows and the resilience is still there, but the problem is that it is becoming more costly to attract those inflows. And there are some structural factors that will lead to a relative decline of inflows to what's needed to sustain the macroeconomic and financial stability of the country.
One of the other issues has been the slow pace of growth in recent years. I believe the IMF projects it'll be at a little over 1% this year. What are the biggest constraints on growth, and what can the government do to boost the level of growth?
Growth has been anemic, and last year it has been close to 0%. And I think this year it's going to be quite challenged as well. The issue is that the monetary policy in Lebanon has become quite tight. And one of the reasons, or the major reasons why monetary policy is tight, is because it has to attract inflows into the country. So interest rates need to rise. So my expectations is that the growth will continue to be quite slow and anemic. And one other issue that is now coming to the forefront is essentially the fiscal consolidation will become increasingly painful and will reduce economic growth further.
I'd like to turn to the issue of reform next. Which areas of the economy are most in need of an overhaul? The one that seems to get the most attention is the electricity sector. Maybe you could elaborate on that, but if there are other areas of the economy as well that you'd like to touch on, that would be great.
Sure. Electricity is definitely an area that needs to be reformed. So historically, electricity on average has been about 40% of the budget deficit in Lebanon on average for the past few years. So it is the reason why a substantial portion of debt has been formed. It needs to be reformed because it is quite costly and the power supply in Lebanon is one of the worst in the world. But it's not only electricity. I think there has to be a strengthening of the rule of law. They need to address issues with tax evasion. There needs to be a more robust economic leadership and economic planning. And there is a desperate need for implementation of structural reform, and notably to improve the productivity of Lebanon and the improvement of the infrastructure.
As you mentioned earlier, Lebanon is among the most indebted countries in the world. According to the IMF, I believe it's ranked 5th globally at the moment in terms of debt to GDP. Are you worried about the country's ability to service that debt going forward? And do you think there's a risk of an eventual default?
Lebanon has never defaulted on its debt, and this is a good track record and a track record that needs to be defended. The cost of servicing debt is the highest on the planet. So as you say, Lebanon is, depending on which source you look at, is the 3rd most indebted country among the rated issuers. And the issue is not whether Lebanon wants to default or not. The issue is whether Lebanon can continue to service its debt. And I think that there is now a good effort to try to reduce the budget deficit. And I think that effort needs to become even more serious, because when you have a situation where the confidence in the system is eroding, the fiscal consolidation or the reduction of debt needs to be front-loaded to restore the confidence. Otherwise, the issue becomes hard to control. And I think this is the critical juncture that Lebanon is in now.
Turning next to the issue of the central bank, the Banque du Liban has long been key to ensuring Lebanon's economic stability, and traditionally it's taken on a bit more of an expansive role than other central banks. How is it approaching the current economic situation, and what steps is it taking?
Banque du Liban, BDL, is a credible institution in Lebanon, and the way it has addressed the situation is by becoming increasingly proactive and creative in its intervention. So it has been, since 2016, engaging in a number of unconventional monetary policy to try to sustain the macro-financial stability. And I think these measures were effective and useful, particularly in the first year or two when they were implemented. The issue is that the central bank can only play a role to sustain macro-financial stability for a while. After that, the fiscal really needs to take over. And I think those monetary policy measures start by being effective, then their effectiveness dissipates, and then at some point they can become counterproductive because they suck out the liquidity from the system. And I think we are at this stage right now. So I think the BDL did what it could. It remains a credible institution, a well-led institution. But really, it is the fiscal or the government, the executive side of the government, that really needs to make a very concerted effort right now to address the fiscal situation.
On that front, on the fiscal situation, what steps would you like to see the government take?
Well, like I was saying before, really the fiscal consolidation needs to be front-loaded. The IMF, for instance, estimates that there needs to be a fiscal consolidation of at least 4.5% this year. And I think there is, to be fair, a good effort that is being done in July of this year. And what I think needs to be done is even more fiscal consolidation. And this is something that will be quite painful. The low-hanging fruit are Electricité de Liban, the size of the government, and tax evasion. And I think all those three issues needs to be addressed quite decisively to restore confidence in the system.
On the issue of tax evasion, is it more about broadening the base? Or I noted when I was doing research for this podcast that the banking sector accounts for something like 2/3 of the corporate tax take, which seems outsized.
Yeah, I don't think it's really the banking sector that is evading taxes. I think it's a broader problem. I think there needs to be an improvement in terms of tax collection because the government can raise taxes, but if they're not collecting taxes, then they wouldn't have done much. There needs to be also a concerted effort to, frankly, fight corruption and improve transparency. And I think there needs to be more direction in terms of where the economy is going instead of just band-aids here and there. So there needs to be a more structural reforms that are being done to essentially put the economy as a whole in a more sustainable path. So, for instance, we as Life have called for some investments in Lebanon's traditional competitive areas, for instance, tourism, the knowledge economy, strengthening some of the areas in some export-oriented areas, for instance, such as wine production, high value-added artifact, and so on.
You mentioned your involvement with Life just now. Can you tell us a bit more about that and the work that it's doing to help address some of these issues?
Sure. Life, to step back, or Lebanese International Finance Executive, is a worldwide membership organization of Lebanese finance professionals based in the diaspora. As you know, Lebanon has a very large, active diaspora. The Lebanese tend to be quite well represented in financial institutions. So Life was founded in 2009 with the aim really to channel this deep talent of expertise and the substantial influence that the Lebanese finance executive have worldwide across what we call at Life 3 pillars. The first one is to connect the Lebanese globally, so that series of events that we do every year. The second one would be nurture, and I think this is an area which we are particularly proud of, and this is an initiative or a number of initiatives that are targeting to help the next generation succeed in finance. So, for instance, since we started Life, we have given around 220 scholarships. We give about 30 to 35 a year. We're very proud that we give 50% to young men and another 50% to young women. We also have a third pillar, which we call promote, which is really a way to bridge Life with Lebanon's public and private sector and channels the expertise and the influence that we have towards the healthy development of the Lebanese economy. One thing to add about Life, I think it's important, is that Life is a completely apolitical organization and is funded by its members.
Great. Turning to the banking sector, I wanted to kind of drill down into that a little bit more. Can you give us a sense of how it's performing and what the key metrics look like in areas like profitability, asset quality, non-performing loans?
Banking has traditionally been one of the sources why Lebanon has been quite resilient. In the past few years, clearly the banking sector profitability is being challenged. I think the banking sector as a whole remains profitable, but it's not surprising that the profitability has been declining because of the challenging economic environment in Lebanon. It is a well-managed sector, very deposit-rich. The problem is that the banking sector and the sovereign linkages have been increasing in order to shore up public finances, which is something that is not particularly healthy. So the IMF, for instance, estimates that close to 70% of the banking assets are now tied to the sovereign. So the sovereign and the banking sector are joined at the hip, and I think this is something that needs to be addressed.
When it comes to the commercial bank's exposure to sovereign debt, do you have a kind of a magic number? How much is too much? 70% seems like an awful lot.
I don't think there's a magic number, and I think every banking sector in the world has exposure to the sovereign that they're in. The banking sector and the sovereign in which they are domiciled is always intertwined. But yes, 70%, or I think the precise number that the IMF mentioned was 68.5, is quite high and needs to reduce.
One of the recent proposals from the finance minister has been to issue $7 billion, roughly $7 billion in Treasury Bonds to help cut debt servicing costs at a very low rate of 1%. And the response from the commercial banks to that has been pretty tepid, pretty limited, not a lot of interest. So the BDL may end up having to buy those itself. Does that make sense to you as an approach? To me, it seems like a sort of way of raiding the bank's coffers indirectly.
It is, and it's not a particularly good idea. I think it exacerbates the distortions in the market, and I think engaging in financial transactions at rates that are not where the market is never a really good idea. The IMF warned against it, and we think that this is also not a good idea. So I think the banking segment is already helping with the public finances directly and indirectly. And I think this measure is not really the best way to shore up public finances. And if it can be avoided, then obviously it is better. And I'd leave it at that.
I'd like to move next to the issue of international donor financing and the 2018 Cedar Conference in Paris, where donors pledged $11 billion. That money was contingent, however, on reforms being put in place. It's been 15 months now. Is there any kind of movement on that front?
Before I answer your question, let me just say a couple of things about CED, because I think there's a narrative in Lebanon that essentially portrays or thinks of CED as a cure for all the country's ills, and it's really not. First of all, the 11 billion, the vast majority of those are concessionary loans. So essentially it's more debt. Clearly it's concessionary loans, so it's a very attractive levels, but it's essentially more debt. And while it is imperative that the country invest in its infrastructure, and we encourage that, I think it does not really alleviate the fiscal pressures. And I don't think it substitutes for the need to fiscally reform and address the major issues that I mentioned in the beginning of this interview. Some of those reforms are being done. I think those reforms need to accelerate, but I think it is not wise to expect SAD to salvage the situation, because it won't.
Historically, one of the other sources of external financing for Lebanon when it's run into kind of economic difficulties have been the Gulf states. And I'm curious, how much willingness is there at this point in Riyadh and Abu Dhabi and Doha to do that kind of lending these days?
Yes, that's a good question, because Lebanon could always rely on the GCC largesse or generosity, so to speak. Now, I think it's a different situation, and it's a different situation for a number of reasons. The first is that Lebanon's political landscape is quite fragmented, and not all of the elements in the Lebanese political landscape are friendly to GCC, or that GCC is friendly to them, which reduces the probability or the scope of that generosity. The second is that GCC countries are really dealing with their own issues as well, which reduces their ability to sustain or to support Lebanon in a significant manner. Having said that, Qatar has announced $500 million investment in Lebanese Eurobonds. The Saudis have indicated some interest in doing so, even though they haven't articulated how, and the Kuwaitis have alluded to that as well. We're still waiting for more details on that front. But again, I don't think that kicking the can down the road by relying on the generosity of GCC countries is the right approach. We need to reform, and we need to fiscally consolidate.
We're running short on time here, but I'd like to ask you before we conclude what your outlook is for the Lebanese economy going forward. Second half of 2019, 2020, how do you see things playing out?
I think the outlook for Lebanon is quite challenged, and a lot is going to depend on what the government does and the level of political and economic leadership that we have. Not to be overly negative, I think Lebanon has some strength and is known to be resilient. I think it has a large banking sector, which is well managed, supported by a large diaspora. Lebanon has an innovative, well-educated, resilient workforce. It has a massive potential as a touristic destination. It has some promising industry, the fashion industry, for instance, wine production, high-end crafts. So I think Lebanon has a number of strengths that need to be leveraged upon. But I think the reality is that the fiscal consolidation needed will require some painful measures, but it remains better than the alternative, because the alternative is quite ugly.
I'm afraid we're going to have to leave things there, but we'll definitely be keeping a close eye on how things play out in Lebanon going forward. Omar, thank you very much for joining the program today and sharing your insights with us.
Thank you.
And thank you as well to our audience for listening in and to our production team for their work on today's program. We will see all of you next week.
This has been a presentation of the Middle East Institute. To support MEI's programs and podcasts, please donate at www.mei.edu. Thank you for your support.